like we said, that they're always going to steer their money the way that the masses go, and the masses are going digital. They're waking up to the fact that the fucking U.S. fucked us.
Yes.
Right?
Biggs and Boggs.
Oh, Matt.
Hey.
Hey, guys, and welcome back to your Future Hand with Biggs and Boggs. I'm Marty Boggs.
And I'm Julian Biggs.
And we got Spencer on sound and screens. Thanks for joining us today, folks. We like to come at you about once a week or so and talk about some subjects that we do believe will benefit your future hand. And this is some quality Canadian crypto content, folks. So make sure you smash that like button. Subscribe if you're new. Let's get right into it. What are we up to today, and how can we plan for tomorrow? Julian.
Thanks, Marty. Good to be back. We are going to plan for tomorrow by talking about Coinbase today. They suggest you drop Bitcoin for the US-backed stablecoin. We're going to talk about that, so stick around. Bitcoin, insurance, its safety, and a lot of things coming up in March involving traditional finance. We got a lot of things to talk about as far as meetings go in March, so stick around for that. But first, market scope.
Ooh.
So we are
Let's go.
At the Bitcoin versus US dollar chart on the weekly time frame. Actually just zoomed out a bit here. We were talking about this potential head and shoulders pattern forming on the weekly after we saw the double bottom there, and basically we have a bullish case and a bearish case if this thing is to play out. If we are to get the breakout here, we're looking at the conservative target for the top of this pattern is $37,000. Now I do believe that if we're heading there, it's going to take a few months, if not 6 months to 10 months. You know what I mean? Like that's quite a ways down the road to play that out.
Yeah.
But if we do break to the upside here, like I said, we were talking about a target about $27,200, and at the time of filming this video, we are back down to the $22,400 level. But we are still forming higher lows. On the daily, we're still forming higher lows on the weekly here, so we're just looking for a close above this level, above the 22,300 level, in my opinion, for a weekly close here, and I still think that we're looking good. If we go over to the traditional finance markets, we saw a huge move up, and we were expecting this. So same kind of deal that we were talking about with the bear trap that happened on Bitcoin at $21,400. It came out of its triangle pattern there and then pumped back in. That's exactly what happened to the weekly chart of the SPX, so the S&P 500 here this week. This was a big move for equities. 2 points to 3 points on the equities is a lot of price action for them, and it got them back into kind of a really strong bullish close for the end of the week. So I'm very curious to see if this continues or if they just dump it on everybody tomorrow morning when the market opens. They'll be very curious to see that. But right now, things still look good and safe. They've still held higher lows, like we said, on the larger time frames, the daily time frame and the weekly time frame. So things look still fairly positive. And if we look at the US dollar, let's just have a quick look, because we knew we wanted this thing to start coming down before we'd see any more price action. So they did hit a bottom there at 101, and they found their way back to testing the 105 area, which we knew was going to be a major resistance. And sure enough, we had that last week there was really negative for the US dollar, which is what we wanted to see. And hopefully that sell pressure or the pressure there will continue and flow into the equities markets coming this week is what we want to see.
But they're going to try their hardest to do the opposite.
Oh, yeah, absolutely. So we want to talk about that too, like Coinbase suggesting that you drop Bitcoin now. That's one of our topics here. So Coinbase suggesting that the CEO, how about no? Exactly. So, he's suggesting that you drop Bitcoin for the US-backed stablecoin. We talked about that here, and I love what Marty said. He said they're going to do the American thing. They're going to come in and try to grasp onto something that's already established. So they extorted Coinbase. He had to pay them hundreds of millions of dollars.
He's got to do what he's got to do.
He's got to do what he's got to do if he wants to keep going with a regulated exchange here.
And it's happening to Binance too.
And it's, they're trying to push Binance out because it's, the whole thing against Binance, which is fucked, is that they have this thing they can say it's Chinese, it's from China. You know what I mean? So we shouldn't trust it, whatever. But it's like, putting him in the category of the CCP is just ridiculous.
Yeah.
You know what I
well,
mean?
that's what they're doing, right? They're trying to make enemies. They want common enemies.
They demonize anything that's not U.S.
Yeah.
Right? That's how they get.
They want you to hate
it. I love.
Which is funny because they're protecting freedom by doing that.
Yeah, protecting freedom. So ridiculous. Yeah.
Which is actually
in the land of the free.
Is that an oxymoron?
And it's like
they're actually doing the opposite.
The whole idea of Bitcoin is to just get the monetary policy disconnected from state. We know that we need a currency system. We know that we need government. It's not about overthrowing the government with Bitcoin. It's about the pressure for them to they absolutely have to. It's going to become mandatory for them to change the monetary policy because people we're waking up to the fact that they've been screwing us.
Well, it's not working.
And they have
it's not
for
working
decades,
for everybody
right?
anymore, right? So it's falling apart, it's broken, it's bubbles,
and if you put your money
in
in bonds, you're losing money right now, because if your gain over 10 years is only 4% and inflation was 7 to 9%
per year.
You know what I mean? You're screwed.
Well, obviously that was high year inflation.
So,
and another thing too, it's like when we're talking about Warren Buffett and his belief in Coca-Cola because of the product, because of what it does and how it keeps moving forward. But yet we look at the charts, and in 3 years ago, don't forget 3 years ago this month, we saw one of the biggest crashes in the market. And then while everybody's at home doing nothing, literally no productivity at all, over the next year, we see the largest gain in the markets in market history, right? Yeah. So it's like it's obvious.
Okay.
It's obvious. Yeah. Where's that Avril Lavigne clip? Can it get any more obvious?
So I just want to we'll just zoom into the daily a bit here, and you can see that we do still have the higher low forming there. So I mean that still looks good. So we do have the chance to move up here. You know, as long as like I said, we held this 22,300 number. But I did want to explain the bearish case. So if that head and shoulders pattern is to fail, like we are potentially looking at going back and testing the lows in the 16K area. You know, at least 18,000, like 18,500, I think, for the bearish case, if not going all the way to test the lows.
Yeah, my assumption is if we see a higher high before we see a lower low, then we're going to ultimately make that higher high and go down hard. But if we see a lower low, if we see a lower high and we go down to make it look like the bearish scenario, that's when we're going to see the major pump, in my opinion, because that's how they like to do it. They're not going to just give it away for free, right? So basically you get faked out or you get shaked out. And not to mention, again, what happened 3 years ago this month, massive shakeout. So there's a very high probability that we are going to see a massive shakeout within the next 3 weeks.
So if we look at the progressive trend here,
But that's what I want to see. I want to see a massive shakeout. I'm scoop it all up, and then we're going to the moon.
Yeah, and so there's unfortunately that's like new investors get screwed in those times, right?
Of course.
But like people need to realize, like you're talking about Warren Buffett and everything else.
If
the way
you
they
sell
pump those markets. Yeah, but they do sell to make their money. So, and especially in places like Wall Street, where a majority of the people on Wall Street that are trading are the ones, they're literally just taking the money from the people who are going in the market. And it's heavily outweighed. There's more people taking from that market than there is adding to that market, right? And they've been doing it for 100 years or more, and they don't give a fuck who gets screwed over. And this is what's exposing all that. You know what I mean? And that's why they try to crush everything. That's why they want you to fear Bitcoin and crypto and CZ Binance because he's from China and everything else, because it's exposing the bullshit fiat Ponzi scheme that the U.S. has created.
Yeah, that's how they get their money.
And when they remove the gold standard and now the state controls the money. We need that separation from money and state. You know what I mean?
Yeah.
In order for it to be a fucking fair monetary policy globally.
Conflict of interest.
Right? So, and like we said, that they're always going to steer their money the way that the masses go. And the masses are going digital. They're waking up to the fact that the fucking U.S. fucked us.
Yes.
Right? So,
and we have the market cap. We have numbers to back this up too, right? So don't just think this is a dream.
Anyway, so I mean, looking at the daily chart here, I do think we're going to at least hold this level. But if it was to do something crazy like the S&P did on Friday there, within the next 4 hours before the daily close today, it'd be insane to see this thing pump back up to 23.5. Now, I'm not saying that's going to happen, but that's the lofty position.
I'm going to tell you right now. I'll tell you right now. That's the trade that I'm looking to take.
A short?
No, sorry, not short. The long I'm looking to take is to hop back up there.
Yeah.
Because we are at a high volume node right now, and if we do hold it, then it would be nice to bounce because it's a POC. Yeah. So if we hold it, then the thing is that's it though. We pump up to the POC and then we get rejected.
Right.
Potentially.
So So I mean, we caught support there.
So now we've broken below it, and we have to come back and retest it as resistance. So that's why I'm looking to take the long trade
Fibonacci, up to that's a perfect balance off the 0.78.
Yeah.
So, if we hold this, I think we're going back to 23.5 over the next few days.
And then that's where we take profits on our trade, and then sit back and see how it
and
looks.
see how it looks again.
Yeah.
Exactly. But yeah, anyway, positive outlook.
But yeah.
So March, a lot of things going on in the financial markets as far as meetings go. So jobs data, CPI, PPI, all these numbers are going to come out again, obviously in March. So March 10th being the first important date, jobs data. Also Mt. Gox. So if you've been in crypto a while, you would have known that early investors in crypto picked up a lot of this stuff around $100 or in the hundreds of dollars range back in 2010. And apparently March 10th, this Bitcoin is going to be released.
Well, first of all, what happened was it was an exchange, but not really an exchange. It was fucking. Oh, sorry. It was. It collapsed. A lot of people lost their money. It went bankrupt or whatever. Like just like we saw with a lot of exchanges this bear market. Same thing happened in the first bear market, right? And so, but all these people, it's been a 10-year case because it was so. At the time we had no idea how to deal with it.
Right.
But now we're 10 years later. They've figured out how to deal with it. I guess. Don't ask me to answer that question. But anyways, they are now getting their funds back. So we're talking hundreds, if not thousands, of Bitcoin coming back into the market, into people's hands. What they will do with them, anybody could say. I say that, think about it this way, like Julian just said to me before the stream here, that like they're obviously going to hold, it's a low, but I'm like, well, think about when they bought it, right? Because if they bought it in the hundreds, then 25K or 20K or whatever, it looks pretty good for a profit. So you'll probably see some profits taken because it's a lot of profits.
And that makes sense for us catching one more high before a bigger dump.
Yeah.
Too, right?
Yeah,
so
yeah,
we got this week, basically 5 days before this goes down.
Yeah.
Right?
Yeah.
So
and then the next week after that, we have CPI and PPI.
It makes sense. And like we're talking about, I mean,
and then we have FOMC
I'm
meeting.
hoping that high is $27,000. That would be great to see, but to 26.8, 27.2.
I actually, when
we go for a higher
when
high.
we were in that range,
if.
when we were sitting last week on that high volume node, I told myself and a couple other people that I'm going to not DCA if we continue to go up from here, because I will wait for lower prices, because if it goes up from here, because it's got no legs.
And
like
that's the thing that people need to understand too, is like, everyone, it's really,
but it went down.
It's really easy to get into the euphoria of green candles, and when your value is going up, you don't want to sell anything. But when the price is going up green, that's when we have to DCA out. And when the price is going down red, that's when we DCA in. Right? And that's how you're going to get on top of this market and eventually be able to take some money from it, because you have to take profits in order to succeed here. So
always take
when it's
profits.
going up, you got to take a little bit out. You know what I mean? When you get into if you're in the green and the candles are still going green, take 10%.
Don't get greedy
or something like that. Don't
take
get
some
greedy,
of it.
right? So that's
put it on the sidelines. You don't have to actually take it out of crypto and sell it and actually pay taxes on it if that's what you're scared of. Just hold it on your wallet in a stable coin, or some of them even hold US dollars.
Right. I just want to get into
and then you can get back in at lower prices, right? That's the technical trading side of it, but it's spot trading. You don't have to do leverage trading.
No.
That's
and
leverage
leverage is what creates this volatility, and they're never going to let people get rich super easy. So when people sit on these shelves and load up a bunch of high leverage, they're always going to knock it out. So if they put in a bunch of longs and everyone's at 25x, 50x, they know that to knock out all these orders and get that nasty leverage out of the market, they got to drive it down $1,000. And you saw that happen in one 3-minute candle. The price just, like, I've never seen that. It never pumps like that. It just went.
I've seen it pump like that.
They're way more volatile up and down when it goes down. There was literally no buy pressure. I watched that whole 3-minute candle, just like, it was crazy. Like, it was just like somebody turned on the tap and the blood was just running. Like, it was just fucking
Well, they just dumped a bunch into the market, right?
Zoom out, looking at the monthly chart here.
I scooped it up.
I want to look at this for a second. So just as the bulls run out of euphoria, the bears do too, right? So we had the massive run up, and we run out of that euphoria stage before it comes back down, right?
Nice consolidation.
And we see that double top. Always happens. So now we see the double bottom. It's the same thing. The bears run out of euphoria. Eventually that euphoria is totally drained out of the bears in that market too, and they get scared to hold their shorts open. They got to close. What happens? Wham! January happens. 50% rebound on the market. We get this bearish, this kind of bear market relief rally.
Pretty funny February candle there too, eh? That February candle is literally sideways.
It's like
it literally didn't move into an entire month.
It's a spinning top, right?
Yeah.
So I don't know. It's tough
funny.
to say.
It's a
Like I
good
said,
consolidation,
so
really.
if we look at this neckline here, the neckline for that head and shoulders theory, we're looking at this price of 24.8, say, being the neckline that we want to break out. And if we can get that, like I said, the extreme bullish case is a target of 37,000 over the next few months, maybe 6 months.
Yeah.
But bearish case, if we are to get rejected here, which is a really good chance that we do get rejected for the first time before a strong bullish rally comes through, and we're looking at a price of, like I said, $16,800, a test to that low range between there and 18K again. So. Yeah, things to look out for.
If we go down, scoop it up. If we go out, start looking at taking some profits.
And so, 14th, 15th of March, inflation numbers. So we'll have a good look at what's going on in the last month into the start of this year.
Yeah, expect some volatility this month.
Inflation, they just printed more money, so it obviously didn't slow down. They're going to have to keep the rate hikes going.
Yeah.
And the question is, on March 22nd, are we going to see a higher than expected market rate hike? And if that happens, we are definitely going a little more bearish, probably to the end of Q2, which is June, July area.
Which is honestly what I'm hoping for, because I want to scoop up some more BTC.
And this is what I'm learning to do now, especially on my trades, and it's giving me way better entries, is zoom out. Like I'm looking for bottoms on the lower time frame, so 3 minute, 5 minute, 15 minute. I'm looking for bottoms on those for entries, yes. But I'm waiting for key levels on the daily, the weekly, and the monthly even. So if you look at the monthly chart, this was a perfect bounce off the 50% fib line of the larger move over the last couple of years. You know what I mean? So like we knew that bottom was coming there at 15.4, and it was a beauty move up, and things are looking good. So we're above the 38% level right now, and caught between the 38% level of the bearish trend that we had over the last year. So interesting to see.
Yeah, let us know what you think in the comments. Are we going up? Or are we going down? Yeah. Good episode. See you guys in the next one. Biggs and Bogs out. Peace.
Biggs and Bogs.
Oh, safety's on.
Yeah.